Hey traders, Alex Ong here and welcome back to the Forex Trading for Beginners video series. What we're going to talk about in this video are currency pairs. And the reason that we're going to do that, it may sound obvious for some of you that know a little bit about currency trading, but bear with me because there are some aspects of this which are really important to grasp, and most retail traders don't pay any attention to it at all, okay? So when we're trading currencies, we're trading them in pairs. So I'm trading one currency against another. So for example, I might be trading the euro against the dollar, or the pound against the dollar, or the pound against the yen, for example. But what's important to understand is that there are two constituents to that particular trade, all right? So if I'm trading the euro against the dollar, I'm trading the euro and the dollar, in which case I'm having to take a view on the euro and I'm having to take a view on the direction of the dollar. And the reason that that is important to understand is that it's our job as traders to make sure that we deploy our capital in the areas where we're most likely going to make money. And there are going to be instances when you look at the euro and you believe that the euro is going to go up in value. And then you look at the dollar and you think that it's going to go up in value as well. So what you have there is you've got like a dynamic of a strong currency against a strong currency. Now, what you would prefer to do is have a strong currency against a weak currency. So you might look across all of the different currencies and you might see that actually, well, the Japanese yen, for example, looks like it's weak or it's going to weaken. So the better trade might be to put the euro against the yen. So you're putting a strong currency, i.e. the euro, against a weak currency being the yen. Now, I'm not saying that that is the case right now. It depends when you're watching the video as to whether the euro is going to be strong or the yen is going to be weak. But I'm just trying to give you an example of how us professional traders, how we approach the markets. We don't just say, I'm going to trade the euro dollar because that's the only thing that I know how to trade. No, we look at the various data that's available to us, and then we try and pair a strong with a weak. And that is how you're going to make money in the long run. But I digress. So we're going a little bit too advanced. We'll come back to this a little bit later, okay? What I need to do right now is show you how, the currency pairs are made up and what it's going to look like on your trading platform. So if you go across to your trading platform, what you might see, or what you will see, is you're going to see at least 6 characters. The first 3 characters are what's known as the base currency, okay? So in the case of the euro dollar, you would have the first 3 characters being the euro, and then the second 3 being the dollar. So we have the base currency here, which is the euro. So if I go base, put that in there, equals the euro, and then we have the quotes currency, like so, equals the dollar. So in this here, this is the base currency, and this is the quotes currency, okay? Now what that means is that if I were to look at an exchange rate, let's say the euro dollar rate is at, and we're going to use round numbers, okay? So these aren't actual numbers at the time of recording. I'm just using round numbers to make it easier for you to follow along. So let's imagine that the euro dollar is at 1, so it's at 1.2000. And currency pairs generally are quoted to the 4th decimal point. With the yen pairs is to the 2nd, but we'll talk about that in a different video. So if the euro is quoted at 1.200, what that means is that for every 1 euro, okay, so for every one of the base currency, every one of these, I'm going to get 1.2 of these. So if I were to go abroad and let's say I'm traveling from Europe and I wanted to change my euros into dollars, if the rate was 1.2000 on the euro dollar, for every 1 euro that I give the person that's changing the money for me, I would get 1.200 dollars back, so $1.20. All right. So what would happen, as you can see here, is you got 1 euro is equal to 1.2. Okay, we've got the 00 at the end. Dollars. All right, but essentially that's $1.20. So that's the way that currencies are quoted. Now, we'll talk about what happens when they go up or down in value in a different video, but that's essentially what you need to know right now, okay? Now, the other thing that you need to know is what currencies do we look at as traders? Now, typically, we will look at the major currencies and the major currency pairs. And the major currencies you want to pay attention to are things like the Aussie, so the Australian dollar, the CAD, the Canadian dollar, the franc, okay? And then we have the yen, we have the euro, we have the pound, we have the New Zealand dollar, that looks like a Z there, and then finally, obviously, we've got the euro dollar, the dollar itself. Now, what we can do here is that to create the pairs, what's known as the major currency pairs are all of these against the dollar. So the Aussie, the CAD, the franc, the yen, the euro, the pound, the New Zealand dollar against the dollar. They are the major currency pairs. So what you would typically see, so if you wanted to trade the Aussie dollar, you would be trading the Australian dollar against the US dollar. The Canadian dollar is quoted a little bit differently. So in this instance, the dollar is usually the base currency and the Canadian dollar is the quote currency. Now, this might seem complicated, but when you start looking around your Forex trading platform or your charting platform, it will start to make sense. In terms of the franc, you've got the dollar against the franc. The yen, you have the dollar against the Japanese yen. The euro is the base currency, so we've got the euro dollar. The pound is the base currency, so we have the pound dollar. And then the New Zealand dollar is a base currency, so we have the Kiwi dollar. And these here, okay, these make up our major currency pairs. They're the ones where you're going to have the most liquidity and the spread. So the cost of actually trading them is going to be the lowest as well if you look at your brokerage platforms. In addition to this, you can also trade what's known as the crosses. So I could trade, the Aussie against the CAD, for example, or the Aussie against the yen, or the euro against the pound, or the pound against the New Zealand, for example. And the way that looks is essentially, if I was trading the pound New Zealand, I might have GBP, NZD like that. If I was trading the New Zealand against the yen, it might be like this. But you're always going to have the same setup. You're going to have the first 3 characters followed by the second 3 characters. Now, when you're just starting out, really focus on the major currency pairs just to get to see how things move. And then when you want to expand your horizons, then go on to the crosses. There isn't really any need to look at what's termed as, exotic currency pairs. So some of the emerging markets, things like the Mexican pesos, for example, or the Polish zloty. As much as you can trade them, the spreads tend to be wider. So the cost of getting into and out of the trade is a little bit wider. So from that perspective, it's possibly not the best way to go. But when you're starting out, so what you want to do is focus on the majors and then maybe the crosses. And if you're focusing on all of those, that gives you 28 different currency pairs to take a look at when you look at all of the different combinations. And 28 different currency pairs gives you more than enough opportunity to be in and out of trades multiple times a week and really kind of grow your portfolio. So you don't need to look at more than that. Okay, so I hope that made sense. I hope you enjoyed it. What we'll do in the next video is we'll look at how these things are priced and how the movements in the market actually make us money. Okay, so take care now and I'll see you in the next video.